Two altcoins are making insane gains and all-time highs, and OpenSea is officially at war with Blur. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin starts the last week of February in a volatile way as a crucial area of resistance fails to break out. After a classic fake out during low-volume weekend trading, Bitcoin is back below 25,000, with bulls still lacking momentum. As Bitcoin continues to try to break 25,000, we see large wicks down as millions of dollars sit between 25,000 and 25.5 as a sell wall. Bitcoin bulls have a problem which is becoming increasingly evident on short timeframes. The 200 weekly moving average, a classic bear market trendline, the 200 WMA has acted as a resistance since the middle of 2022. If Bitcoin manages to break above the 200 weekly moving average, which is becoming increasingly likely, we're going to see a lot more traditional finance coverage on crypto again. And Bitcoin's network fundamentals are keeping the bullish vibe firmly intact as the month draws to a close. The next Bitcoin automated readjustment will see difficulty adding an estimated 10% to its current tally. This will cancel out the previous readjustments, setting difficulty to a new all-time high. This is a crucial measurement for gauging Bitcoin miner sentiment, as such significant increases suggest corresponding advances in competition for block subsidies. Arbitrum recently eclipsed BNB chain in DEX volume in a 24-hour period as reported by DeFi Llama. The Layer 2 solution recorded about 440 million through DEX transactions as compared to BNB's 410 million in the same 24-hour period. Arbitrum's DEX volume over the past week has grown by 10%. This was an impressive feat considering that the BNB chain had a significantly larger user base when compared to other chains. Arbitrum's performance in the DeFi space has been a revelation as of late, and it's been primarily driven by popular protocols like GMX and Camelot. GMX accounted for nearly 30% of the total value locked on the Arbitrum network. Arbitrum's TVL spiked as GMX's activity shifted from Avalanche to its chain. According to DeFi Llama, the TVL climbed by about 43% in February. A new DEX on the chain, Camelot, has created a buzz in the DeFi space as well. Camelot's TVL jumped from a little over 22 million at the start of February to over 63 million as of now. The daily active users on the chain grew by almost 80% in February, while also hitting its 6-month high as of February 16th. The number of Ethereum tokens locked in liquid staking protocols has surpassed 7 million according to data from DeFi Llama. Currently, the total value of assets locked on these platforms stands at nearly $12 billion. The market is dominated by the top 3 liquid staking platforms, which control 95% of the market. Lido is the biggest player, responsible for over 70% of the locked ETH, holding over 5 million ETH valued at $8.7 billion. Coinbase comes in second with 1.1 million staked ETH, while DeFi protocols Rocket Pool and Frax Ether have around 500,000 ETH staked on their platforms cumulatively. The number of locked ETH on platforms has risen since Ethereum developers announced that they would prioritize staked ETH withdrawals in the Shanghai upgrade. Additionally, the US Securities and Exchange Commission charges against Kraken Crypto Exchange have made liquid staking protocols more attractive to investors. However, the increased ETH staking activity over the past few months has not translated into more profits for investors. Although more than 16 million ETH have been staked, most stakers are currently at a loss. According to Binance research, around 69% of ETH stakers are underwater due to having staked their assets when ETH was trading above 1,600. Binance added that about 2 million ETH were staked when it was trading between $400 and $700 in December 2020. These stakers are likely illiquid since liquid staking was not well known at the time. Binance says that these are some of the strongest Ethereum believers, meaning they likely wouldn't sell even when withdrawals become available. Despite these challenges, Ethereum's price has increased by 42% on a year-to-date basis. NFT marketplace OpenSea announced a massive structuring around lower platform fees as competing marketplaces continue to drain away its once dominant user base. According to data from Nansen, on February 18th, NFT marketplace Blur surpassed OpenSea in daily Ether trading volume. As a reactionary measure, OpenSea announced 3 major changes to win back its migrating customers. The measures include a 0% fee for a limited time, introducing optional creator earnings, and leniency on other operators. OpenSea admitted losing users to other NFT marketplaces that don't fully enforce creator earnings, and the new measures are an attempt to revitalize its dominance in the space, saying recent events, including Blur's decision to roll back creator earnings, even on the filtered collections, and the false choice they're forcing creators to make between liquidity on Blur or OpenSea, proves that our attempts are not working. OpenSea believes that it defended creator earnings on all collections while reiterating its support for Operator Filter, a function aimed at helping creators secure the revenue for resale of their work. However, this filter proactively blocked recommendations of marketplaces that sported the same policies. Blur's daily trading volume supremacy can be attributed to its new royalty policy, showcasing differences in royalty payment options between its platform and OpenSea. It read, OpenSea's current royalty policy prevents collections from being able to earn royalties everywhere, but the end result is that creators are limited to earning royalties on only one platform at a time. After dropping the most anticipated Blur token airdrop, Blur recommended that NFT creators block secondary trades on OpenSea, saying that it would only enforce full royalty settings for projects that banned OpenSea. Blur framed the move as a pushback to OpenSea's own decisions late last year, where OpenSea said it sought to protect creators as a result from actions by Blur and other rival platforms. Amid the royalty war between the two markets, community members highlighted the importance of competition in the industry. If it weren't for zero royalty marketplaces, more prominent players like OpenSea would eventually increase fee structure, which would hurt creators and collectors. Community members speculate that OpenSea would probably increase its platform fees in the future if it successfully manages to amass its lost customers, a predatory move often noticed in industries with less competition. Frank DeGods, creator of the NFT collections DeGods and News, tweeted soon after saying, "Harsh reality, NFT marketplaces are all trying to maximize market share so they can raise bigger VC rounds, and the best way to get market share is to have the lowest fees for high-frequency trading." Filecoin has grabbed the attention of many traders in recent days because of its current price action. The token's price increased by over 11% just in the last 24 hours, while its volume shot up by over 130%. According to CoinMarketCap, Filecoin registered a weekly uptick of more than 77%, and at the time of recording, it's trading at around $8.47, with a market cap of more than $3.29 billion. A possible reason for this unprecedented surge can be attributed to the hype around the launch of Filecoin's FVM, which is expected to go live in March 2023. The Filecoin virtual machine is an environment for smart contracts on the Filecoin network, which will bring user programmability to Filecoin, unleashing the enormous potential of an open data economy. Interestingly, Filecoin has also recently completed its most successful hackathon to date. The hackathon ran from the 20th of January to the 10th of February and received overwhelming support from the developer community. FVM will be interoperable with the Ethereum virtual machine, allowing Filecoin to form cross-chain bridges, enabling crypto funds to move from one blockchain network to another. While most cryptos are far below their all-time high, OKB has been consistently hitting a new all-time high for the past few days. OKB is the utility token of the exchange OKX, and part of the reason for the surge could be the recent proof of reserves. The exchange says that over 175,000 unique users have visited its proof of reserve page since it launched the initiative last year, saying proof of reserves is far from a niche topic, it's of vital importance to building user trust, and we're dedicated to ensuring OKX shows continued leadership in this area. In January, the exchange released a report stating it had $7.5 billion in clean assets. The cleanliness of assets refers to a metric developed by CryptoQuant, which measures how reliant an exchange is on its native token. OKX continues to have an extremely clean reserve, while Binance's cleanliness comes in at 94%, while Huobi is at 61%. OKX's chief marketing officer said that OKX has never used its native token to finance the company. The native token was never a big part of our business or treasury. Our native token was always designed to engage our most active customers and give them a way to seek discounts through activity on the platform. The founder of OKX also tweeted saying, "All-time high is good news. It's the community's trust with OKX." Also, a new OKB chain will be launched in Q1, which is independent from the current OKX chain. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.